What is going on, investors? Hopefully, you guys are having a wonderful day out there. It is time to keep earnings season rolling right along here on the Investor Channel. We're going to take a look at Bank of America Corporation, ticker symbol BAC. Would you believe it that Bank of America over the last year is up 72%? No, this isn't Amazon. This isn't Apple. This isn't Facebook. This isn't one of your high-flying tech stocks that you're overpaying for. This is Bank of America that pays a 1.95% yield at this inflated price. Just absolutely phenomenal. So if you have this should be a lesson to you. If you have a balanced portfolio, you don't have to get all your performance from high-flying, overvalued stocks. Companies like Bank of America could go up 72% over the last year. Just year to date, this stock is up 42%. We'll have to talk about that when we get over to the stock chart. We'll run through the Q3 earnings. So Bank of America, like most banks this week, are reporting their earnings. We'll talk about them. We'll also get into a little bit of interest rate discussion. We'll also take a look at some of the news that Bank of America has been making over the last quarter or so, just to catch you up on what's been going on with Bank of America over the last 3 months. And then, yes, we're going to get into the numbers as well. We'll take a look at the Q3 numbers. We'll compare them to the second quarter, get kind of a quarter-over-quarter view, see how things are going with the bank, and then also year-over-year over at Bank of America. And then we got to look at the valuation at Bank of America. I mean, when this stock is up 42% year-to-date, over 70% over the last year, you better believe that the valuation at Bank of America is at a 10-year, like literally a 10-year high. You're paying the highest multiple, in my opinion, for Bank of America that you've paid over the last decade. Is it worth it? Is it worth it? We'll talk about that, and then we'll have to look at this from a technical perspective as well. It's painting a little bit different story. We did JPM yesterday on the channel, and that had kind of rolled over and rolled into a bottom channel that we could potentially buy here. Bank of America's on a breakout, believe it or not, up 72% over the last year. And this thing looks like it wants to break out and go even higher. Can you believe that? Bank of America's Q3 earnings came in, and look, it's actually painting a little, I can see why this stock is rallying a little bit today. It's painting a little bit a different story than what we saw with JPM, which we covered yesterday here on the channel. They're still seeing loans kind of contract a little bit or go down, whereas total loans and leases in the business segment over at Bank of America came up to $910 billion. It was at $900 billion at the end of just last quarter. So we're seeing a nice little increase there. Now, deposits are still increasing. We're seeing a $1.96 trillion on deposit. We were sitting at 1.91, so there's a lot of cash sitting in affluent customers' bank accounts. That cash will either get chewed up by inflation or potentially maybe even cause the inflation as it starts unwinding out of the system. That's at least one argument from economists. Other economists might argue something different. We might get into that here on the channel as well. Now, non-interest income came in at $11.7 billion. That was up from 11.2 in the previous period, and the net interest yield just a paltry 1.68%, but it is rising quarter over quarter to 1.61%. Now, speaking of interest rates, mortgage rates just crossed 3%, the highest since April, amid building inflationary pressure. And so interest rates are rising. You've got home prices continuing to rise. And so something likely, in my opinion, has to give at some point. Okay, at least consumers are either going to have to balk at the high rates, basically turn them down, or they're going to have to turn down the high rates of housing. And at some point, you have to figure that if home prices continue to go up, and then if interest rates continue to go up, homes are just simply not going to be affordable outside of the very, very affluent person or the person that's buying a house that's, maybe slightly lower than something that they can afford. I think something's got to give here. At the very least, we've got to see some sideways action in home prices. Otherwise, everybody's going to get priced out, and you could see a rapid decline in those values. We'll see what happens there. Now, Bank of America nudges up their minimum hourly wage to $21. Put that in your pipe and smoke it, progressive Democrats. Look, these companies are raising the minimum wage on their own. Now, that they're heading to a $25 per hour wage by 2025. This is with no government regulation, no laws having to be passed. This is just simply the market that Bank of America is in, a tight labor market to attract good workers. they have to pay more. I tell you what, out here in California, $21 to $25 an hour, not that bad. Outside of California, dude, you're probably doing all right with that kind of hourly wage. Now, Bank of America's CEO, Tom Montag, and the vice chair, they're set to retire. They rolled over some of the executives over here at Bank of America, including the COO and the CFO. And they added 5 new members to their senior management team. So Bank of America, it's interesting. They're going through a transition. The company has literally not been higher from a valuation perspective. We'll talk about that here in a second. And they're starting to change management. So we'll see how this new management team leads Bank of America into this next step. Now, the last thing that I want to point out until we get into the numbers here, and these numbers are fantastic. We'll talk about them here in a second. But the company set a record for patents granted in the first half of 2021. The bank applied for 403 patents. And it's just incredible. So you don't think of Bank of America as a high-flying stock. It is up 72%, and you don't necessarily think of it something that's innovating and getting patents on its technology. No, it's in the top 300 of U.S. granted patents, its highest ranking ever. Tell you what, I kind of like what I'm seeing over at Bank of America right now from a lot of different levels. Now, let's see if the numbers kind of add up, because these are the most important things. So on this sheet, we've got our third quarter here, kind of smack down in the middle. This is our most recent quarter. They put it in bold. These 2 left-hand columns, which I probably won't focus on too much, this is for 9 months ended over here, the left-hand column being our most recent year. Now, this column is our quarter over quarter. So we've got quarter over quarter here, and then this third quarter over third quarter, this is year over year. We'll focus on this for the most part. Now, we've got our net interest income and we've got our non-interest income, so fees, those types of things. What's interesting about Bank of America, it's kind of a 50-50 split, right? They make money off interest, but they also make money off other ways, fees, charges, and those types of things. So for the most part, you get a little bit of safety. When rates are low, they're still able to charge fees. When rates start to go up, which we're seeing some evidence, at least from a mortgage perspective, then you get more interest income. All things being considered, the company came in at $22.7 billion worth of total revenue over the third quarter. That is up quarter over quarter. We were sitting about 21.5, and we're sitting at about 20 a year ago. So we're up over 10% on our revenues. All that is looking really good. Now, what I also want to show you here is provision for credit losses. We were able to add back $624 million. So what these banks were doing, flash back to the third quarter of last year. We had no vaccine. We had a lot of uncertainty. People weren't sure if people were going to be able to pay their bills come third quarter, fourth quarter, first quarter of this year. Well, Bank of America was setting aside lots of money. In fact, nearly $1.4 billion they take out of their business, they put to the side, and they say, well, when these people default on their home loans, when they default on their credit cards, their car loans, all the loans that we give, well, we'll have some money on the side to kind of cover that. Well, what ended up happening is you had stimulus checks and you had people actually doing really well, depositing way more money into the banks than people thought, and they started to release this money back into the company because they're saying, well, we don't need all this money set aside for a rainy day. The rain is not coming. So in the second quarter, they released $1.6 billion. That bolstered their net income that quarter. And in this quarter, not nearly as much, but we still get a benefit of $624 million, which is just slightly more than kind of a rounding error when we get down to net income. Now, our non-interest expense. So I talked about how this company nudged up their minimum wage to $21. It's heading to 25, and you're thinking, well, it's going to wreck our expenses. Not really. Take a look at this. $14.4 billion on non-interest expense. We've got $15 billion in the previous period, and we're basically flat over the last third quarter. So they're doing a nice job, paying their workers more, but it's not really flowing down. It's not really hurting the company from an expense perspective. So we've got our income before income taxes. That came in at $8.9 billion. That's up over $900 million from the previous quarter, and it's more than double where we are at the third quarter. But again, remember that we had to set aside $1.4 billion so that it basically obliterated our profit. It's kind of tough to compare these two in terms of the loan losses. Now we come down to our net income here, $7.2 billion. We were at 8.9 in the previous period, but we unloaded an extra $1 billion from those credit provision losses. So we got a credit for that. All things being considered, it's looking really nice over at Bank of America. Is it super accelerating? Are we seeing top line growth like we see at some high flying tech stocks? No, but we're seeing a stock perform like it. That's the most important thing. And let's keep moving down through here. They are executing a buyback over at Bank of America. Remember, at the Federal Reserve actually stopped dividend increases and buybacks from all the major banks. That's how uncertain things were last year. Banks were putting aside billions of dollars for potential credit losses that never materializes. The Fed put restrictions on buybacks and dividends. Those probably didn't even need to be in place. So we're seeing an acceleration of the average diluted shares outstanding. We're 8.5. We were at 8.7 just in the quarter before. So they are buying back shares over at Bank of America. That is helping drive the stock up as well. Now, the next thing I want to show you are these total deposits down here. Here's that $1.9 trillion on deposit. We were sitting at about, well, call that about 1.9 from a rounding perspective in the previous period. And then take a look at this. Last year, you had 1.7. Consumers are just continuing to pile money into their accounts. And so you can look at this a couple of different ways. Number one, it shows you that the consumer is relatively healthy. The other thing that it could trigger is some inflation. Imagine if these people start unwinding this money and the velocity of money starts getting bigger. Well, that could trigger some inflation. So the last thing that I want to show you on here before we get into this from a technical perspective is number one, we'll look at dividend paid. We got 21 cents in the most recent quarter. This company pays an 84-cent dividend rate for the entire year. All things being considered, it's not well covered, but it's covered well enough that this company is paying you a large amount of their profits in terms of their dividend. Now, the other thing that I want to show you is this company, in my opinion, is wildly overvalued from a traditional valuation metric. Here's tangible book value, which essentially for the bank is if the bank liquidated all its assets, sold off its entire loan book, and it was left with, you just basically sold Bank of America for cash, the company would be worth, $21.69 per share. What is the stock price today? $44. So you better believe from a price to tangible book value, you are paying nearly 2 times tangible book for Bank of America. And you might ask yourself, well, what's Bank of America normally trade for? Well, oftentimes 1 times tangible book value, sometimes even less than 1 times tangible book value. Here's a 10-year chart of price to tangible book. And you see here on the right-hand side of this graph, we are at a 10-year high in terms of price to tangible book. You are paying 2 times the book value for this company. And I just think that is wildly overvalued unless you think interest rates are just going to skyrocket and people are going to pay those interest rates and pay Bank of America for that. And we're already seeing consumers balk a little bit. You look at mortgage data in terms of when interest rates go up and home prices go up, what do? They don't buy houses in the same amount of numbers that they did before. And so I think consumers will balk at this, but that is just my opinion. I think this is not necessarily the greatest time. When we're looking at this from a fundamental perspective, a valuation perspective, I don't think this is the best time to buy Bank of America. Now that I just said that, here it is from a technical perspective. What I just talked about was from a fundamental perspective. Now I want to talk to you about technicals, and this is why on the Investor Channel, we always talk about both, because the market, I don't know what the weighting is in the market. If the market weighs fundamentals more than technicals, it probably depends sector to sector, company to company, and situation to situation. But from a technical perspective, Bank of America is a buy because we are in a very, very well-defined uptrend. We have broken above an area of resistance here. I think you could move this line up here to $43. You are above it, and you are moving to these all-time highs. Now, the way you know this is continuing in an uptrend is you need to get above $45, which is only 50 cents from where the stock is right now. You break above 45 on this one, and you are in a breakout uptrend. Sellers have just absolutely dried up when it comes to Bank of America, especially when you get above the $45 price tag. This thing can just continue to walk up. Now, the other thing that can happen here, and I think, especially when you start dissecting these numbers and you see you're paying 2 times tangible book for this, and you haven't paid that expensive a price in a decade for Bank of America, well, I think we could hit our head here at 45 and then come back down. You've got areas of support at 43. We had this line marked out down here. You got basically every dollar on the way down. You have some areas of support, but this thing is looking bullish, especially if you can get above 45 on this one. So this is painting a couple different pictures over at Bank of America. From a fundamental perspective, wildly overvalued, okay? From a just over the last year, up 72%, a mega cap bank up 72% over the last year. Do we really think over the next year we're going to see, I don't think there's any way we see that type of performance again over the next year. Will we even see half of that? We'll even see 10% of that. Will the stock even go up 7% over the next year? I think you can make arguments that it probably won't, okay? And look, the last thing I want to say is I own shares of Bank of America. Bank of America is probably my largest holding in terms of bank stocks, but this is a stock I bought ages ago when it was like $20 a share, okay? So I love Bank of America. I think this is a very well-run bank. I think we see evidence of it here when we look at the numbers. These are better than what JP Morgan printed yesterday. I think this is a fantastic company. I like what they're doing from a management perspective, an innovation perspective. I like that they're paying their workers more. I don't like where we're seeing interest rates go from a consumer perspective, but I like it from a banking perspective. All things being considered, I like Bank of America, but it is wildly, just wildly overvalued, in my opinion, at the current time. And you're only getting a 1.95% yield. If interest rates continue to go up, that makes Bank of America not necessarily that great of an investment from a dividend perspective. That wraps it up on today's video. We'll be back again with lots more videos very shortly here on the Investor Channel. Good luck with your investments.